No two markets are ever alike, says Tom Mulligan, Executive Vice President of Western World Insurance Company. In this interview with Insurance Journals Chris Boggs, Mulligan discusses his views on the current soft market.
I've been with Western World for about 27 years, so we've seen the markets come and go, and we've been here before. But this one's a little different, and in my opinion, every market brings a slight change to it, and
Right.
you can always look back on a hard market or a soft market and wish you had done something a little differently. So when we look at a market change, we try to look back, think about now, what will we do differently today,
Right.
that we might look back on in years ahead and wish we had done differently. But the difference, I think, in this hard market from in this soft market from the previous one is the difference in the economy and the financial markets.
I'm going to ask your opinion, which means you can't necessarily be wrong. But do you have any estimation, any particular guess when you think the market may start to turn back towards a hard market?
To oversimplify the question, the marketplace has to begin to lose money before this is going to change, and how long that takes depends on a lot of things. We're staring down the barrel of Hurricane Ike as we speak today, and that's certainly going to have a tremendous impact on insured values, losses in states, and that, in my opinion, will not change a market. It may firm up certain products, and it may create tightening in the property or coastal or wind exposed or cat exposed property, but I don't know that any storm has ever actually changed a market.
Right.
Until the industry as a whole, I don't know if you're familiar with an analyst by the name of V.J. Dowling.
I've heard the name.
Yes, he produces a newsletter. He characterizes the market cycle in a very simple and elegant way. He characterizes it as 4 phases: cheating, pain, fear, and restoration. Cheating being the soft market,
right.
Pain, restoration being the hard market. But he quite simply and eloquently points out that it takes fear on the part of industry executives to have the market change, and that really doesn't come about until there are very pervasive losses and the industry goes negative.
Right. Okay. Great.
And I think that's going to take a little longer than most people think.
The E&S industry as a whole has always been known as an innovator, both from a risk standpoint and a coverage standpoint, coverage and market standpoint. Is that the future of the industry, or is it becoming to look more like mainstream, or is it going to be a combination of the two?
No, I don't think it's becoming more mainstream. Obviously, the surplus lines industry is a significant industry at almost $39 billion, I believe, last year. That is a significant portion of the insurance industry, but there are more and more risks to be assumed. Clearly, the cat-exposed areas of the country have called on the surplus lines industry more and more to solve their problems, and that's what we do. We provide the excess capacity and safety valve function for the industry, and I don't see that role changing in the future.
In the same vein, the E&S market, in some points in history, has been considered the market of last resort. What do companies like Western World do to point out that it's really not a market of last resort?
Well, from a compliance and regulatory standpoint, of course, we are a residual market and a market of last resort of sorts.
Right.
But in many cases, we provide innovative solutions for insureds, and I have to give NAPSLO a plug here as well, because NAPSLO, through the Communications and Technology Committee, has embarked on a project as we speak on that very point about how to explain to the retail and insured risk managers at commercial buyers the value of the wholesale distribution system and the E&S market and what we bring to the table, the value added, the underwriting expertise, the tailoring of specific forms to specific needs. And from a compliance standpoint, we are a residual market, but we serve a very important need in filling in the gaps where the standard market either willingly chooses not to not to go, or cannot for regulatory or compliance reasons. They can't get the appropriate rate or the appropriate form filed in the jurisdiction. So I don't see our role changing dramatically.